Hello and welcome to Africa Amplified, Bloomberg's monthly show bringing the continent's biggest stories to the world. I'm Jennifer Zabasaja in Johannesburg. This month, we dig into shifting global power dynamics and where some of the continent's big hitters fit into them. With just days to go until the U.S. elections, African leaders are hoping the next president will bring renewed aspirations for business on the continent. President Biden's promise to visit sub-Saharan Africa while in office was almost upended due to Hurricane Milton earlier this year. He now plans a visit to Angola in December. Elsewhere, Ethiopia makes its BRICS summit debut in Kazan, Russia, as one of 4 official new entrants in the bloc. The expanding group of countries is on a push to become a global economic alternative to the West and won't have escaped the notice of Washington and its allies. Over the next half hour, we'll dig into these stories and the implications for Africa and beyond. But first, as we always do, an update on some of the top stories we're following from the continent. We'll head to Kigali, Rwanda for the latest in the east and to Lagos in Nigeria in the west. But let's start out with some big news out of southern Africa in Gaborone. Early results from Botswana's election indicate that the ruling party that has ruled the diamond-rich nation for the past 58 years will lose its grip on power. The opposition has won all 16 constituencies announced so far, with final results expected later today. For more, let's bring in Bloomberg's Mbongeni Mnguni, who is in Botswana's capital, Gaborone. So, Mbongeni, you've been following this very closely. Give us the latest.
Good morning, Jennifer. The latest, earlier on this morning, the opposition officially went beyond the point at which the ruling party cannot hold on to power anymore. So in other words, the parliament was 61 seats, and the ruling and the opposition had 35 seats, I think, about an hour or so ago, which officially means that the ruling party has lost power for the first time in 38 years. What we're watching now is whether any of the opposition parties will reach the threshold at which they are able to have the constitutional right to select a new president and form a new government. The closest party to that is the main opposition party, the Umbrella for Democratic Change. They are at about 23 parliamentary seats thus far, and they need to get to 31, which is something that we're watching over the next couple of hours. But the trend shows that they should be able to secure that possibly before lunch.
And Mungeri, really the backdrop of this is the diamond sales, really, and what we have seen in Botswana over the past few years. Talk about potentially how that is affecting how voters went to the polls and now what the results are that we're seeing.
Indeed. The diamond downturn is something that voters here are quite familiar with because it's a product that's cyclical. But this year in particular, the downturn has been more prolonged and deeper, perhaps because of the impact of the lab-grown diamond. And so because of how deep it was, it had a huge impact on the government budget. We're now expecting a much wider deficit than we previously been anticipated. And in addition, which is what a lot of voters focused on, was the ruling party's failure over its 58 years to diversify the economy away from its dependence on diamond. And then we saw that for the first time as well, we saw that the government savings dropped to an all-time low, which was something that the opposition was very successful in campaigning around, and then attacking the President Masisi's campaign and his administration on that record. So those are issues that the center top of mind for voters as they went to the polls.
Certainly. We'll see. Thanks so much, Mbongeni Mnguni in Gaborone. Thank you so much for the update there. Now let's move to the west in Lagos, Nigeria. Nigeria's oil industry seems to be at a crucial crossroads. The government approved ExxonMobil's sale of its onshore oil and gas assets to domestic energy supplier Seplat. And Dangote's refinery, the largest on the continent, is operating at almost 70% capacity. For more, let's get to Bloomberg's Nigeria bureau chief, Anthony Osei-Brown, who is in Lagos. So, Anthony, what's the significance of this deal?
Yeah, I think it's significant because it gives Nigeria to restore some production. This deal happened like 3 years ago. And during that period, while it was waiting for approval, production from those wells that Exxon was planning to sell dropped by 5,000 barrels a day. And as you know, Nigeria has not been able to meet its crude OPEC quota for almost a decade now. So this is an opportunity for Nigeria to improve oil production. The government has set a target of increasing oil production by 1 million barrels over the next 12 months. So these approvals, which they granted to about 3 different exits by international oil majors, so it's part of the efforts to see that oil production rebound. So the Seplat deal is the big one. Seplat shares jumped to a record high after that approval because it's been waited for so long, and it gives Seplat an opportunity to take over oil wells that will double its production maybe over the next 1 year.
Anthony, talk to us about the impact of Dangote's refinery. You've been paying close attention to it. How is it affecting local fuel supply?
Yeah, we've seen a significant improvement in local domestic fuel supply. Before now, we've had these long, debilitating queues across the country. Now we are seeing less of those queues, and Dangote petrol has been, gasoline has been spreading across the country. Though prices are higher, demand is lower, but yeah, we are seeing increased supply locally, and mostly from the NNPC. Independent marketers are looking at also buying from the Dangote refinery. And so in the long run, hopefully Nigeria will end these queues forever, which has been a feature for more than a decade now.
That's the aspiration there. Bloomberg's Nigeria Bureau Chief Anthony Osei Brown in Lagos. Anthony, thanks so much for joining us. Now let's go to Eastern Africa. The IMF has agreed to move ahead with Kenya's aid package to help shore up finances in the wake of deadly anti-government protests over tax reforms. Let's bring in Bloomberg's Ndiro Oganga, who's joining us from Kigali in Rwanda. So, Ndiro, thanks for joining us. I mean, how important is this latest IMF disbursement, especially considering what we've seen in Kenya?
Jen, it's important because it goes ahead to unlock about $606 million that will help in boosting foreign reserves and also steady Kenya's fiscal position. Important to remember that Kenya was forced to shelve its finance bill that was supposed to raise about $2.7 billion following deadly protests that left nearly 60 people dead. As a result of this shelving, the budget deficit is expected to grow by 1% from 3.3% to about 4.3%, forcing Kenya to get into talks with Abu Dhabi for $1.5 billion loan at 8.2% interest rate to try and plug into that budget financing hole. But then again, IMF is not really stoked about this idea. They raise concerns about interest rates that are higher than growth rates, saying they pose long-term risk to debt management, particularly for a case like Kenya that is balancing raising revenue domestically while honoring external debt obligations.
Ndiro, let's just talk about the political situation. We've been following this closely. We saw that the court ruled in favor of swearing in the new deputy president. What has been the reaction? Give us a sense of where things stand now.
Well, it's a new day in Kenya. The new deputy president gets to be sworn in today after the court vacated an order that was barring the nominated deputy vice president from being sworn into office. This comes after the former vice president, Rigathi Gachagua, went to court to file a petition challenging the legality of his impeachment. Now, this ruling gives President William Ruto an opportunity to consolidate power and try and address the issues that are affecting Kenya, including runaway debt, education, healthcare, and insecurity.
All right, we'll leave it there. Bloomberg's Ndiro Oganga in Kigali for us. Thanks so much, Ndiro, for your reporting, as always. Now, coming up, we turn our attention to another election thousands of miles away. In 4 days, Americans will pick their new president, and African investors are wondering how the result may change market prospects for the continent. We'll hear from one fund manager in a very unique position here with us to address the question. Stick with us. This is Bloomberg.
There's a huge array of things that are going to be unlocked by AI, and it's very early to say what all the benefits will be. We've got to look at the opportunities and also the risks of the technology with clear eyes and partner with governments and communities and businesses to harness the technology for good. And that's one of the reasons I'm here, is to sort of make sure that I can get the sense of what's going on in Kenya, Nigeria, and across the continent here.
Yeah, because it's different operating environments depending on which market you're looking at. Matt, can I just finally ask you, I mean, in terms of investment, is there anything, when we take a look at the geopolitical landscape, there's a lot of different players, a lot of leaders who are speaking differently about protectionism and investment and where to channel investment. I mean, is there anything that could potentially change Google's commitment to the continent, say the U.S. election, potentially what's happening in China? I mean, I wonder if there's anything that you factor in.
Yeah, look, I mean, it's a very complicated time geopolitically, isn't it? And I won't go into kind of an analysis of that. What I would say is that countries are working hard to understand these new technologies and think about the rules of the road, and that's right. I'm responsible for Google in Africa, but also in Europe. You know, and in Europe, in the last 5 years, we've had 100 pieces of regulation of the technology space in 5 years. So it's really hard for entrepreneurs to make sense of that. Here in Africa, the African Union actually is adopting a set of policies that are Africa-wide, and I think that's a smart approach. Like how you get common rules at scale is going to make a difference. So the big opportunity for Africa, I think, is to have the 2 billion people here under a similar set of rules and guidance, so that an entrepreneur in Nairobi can come up with something that can scale to 2 billion people. And that's the opportunity, I think, geopolitically for Africa right now, is to harness this technology and think about the route for entrepreneurs to get to scale.
Now, that was outgoing Google EMEA President Matt Britton speaking with us from Nairobi about the challenges and opportunities of investing in Africa. Now, as an American company, Google's investments in Africa could be affected by the U.S. presidential election now just 4 days away. A change in Washington could impact trade and investments between the U.S. and the continent. Franklin Amoo heads private equity firm Bayliss Emerging Market. He's also on President Biden's advisory council on doing business in Africa, where he runs its digital subcommittee. Here's a bit of what he had to tell us.
What's unique about working in Africa from a U.S. perspective, from the U.S. private sector perspective, is actually the bipartisan approach to trade and investment on the continent that we've seen over the last sort of decade emerge. Really, I think the restart in U.S.-Africa relations really started in around 2014, thereabouts, when you had the first African Leadership Summit. We saw continuity through the first Trump administration, actually, where you saw the creation of initiatives like Prosper Africa, where you saw the U.S. International Development Finance Corporation actually double in terms of its investment capability and capacity. You also saw a renewed commitment to the Export-Import Bank of the United States and other key agencies that are core to the U.S.-Africa partnership. I think we saw continued continuity under the Biden administration with the PAC-DBIA, the Presidential Advisory Council for Doing Business in Africa, continued into that administration, which is the council that we serve. We serve as the chair of the Digital and ICT Subcommittee for that body. So I think we'll see more of the same. I think if you think about what's key and what's important to both sides of the aisle with respect to foreign policy, it's promoting increased U.S. trade partnerships around the world, building ties, particularly with areas where you have critical security of supply of key industrial commodities. And I think that you'll see that continuity regardless of who wins on November 5th.
So then, Franklin, many people are talking about the potential Trump trade that we're seeing in markets right now. But even putting that aside, there's a lot of potential for political uncertainty. I mean, from where you sit, how do you prepare for that? That could potentially come if we don't get an outright outcome on November 5th.
It's a big issue, and I think partners to the U.S. are, I think, concerned and perhaps rightly so nervous about what it means for policy continuity depending on who wins the election and who prevails. I think specifically with respect to Africa, you've actually got a unique opportunity because both sides are very concerned about China, very concerned about U.S. sort of over-reliance on Chinese trade and supply chains, and looking for opportunities to relocate supply chains to friendlier jurisdictions. And I think to the sensibilities of both of the leading candidates, Africa could represent an interesting opportunity for friendshoring. This is a term meaning moving production capacity and supply chains to markets and geographies that are seen to have a more favorable disposition to the U.S., to take into consideration U.S. Supply chain security and so on. So I think from an African perspective, there is a little bit of opportunity irrespective of who wins, and I think that this renewed embrace of Africa will continue irrespective of who wins.
Franklin, what is the argument you make to your clients to put their money then into Africa versus potentially cheaper equities in China or in India or elsewhere in the EM world?
Absolutely. It is a unique investment landscape, and I think one of the most unique things about it is that today the private market opportunity is actually much more significant than the public market one. Most African bourses, as you know, are quite illiquid, fairly thin. That's something that's changing over time. That's something that we want to contribute to developing over time. But today, we think the real opportunity is in private markets, in more illiquid investments, and that requires intermediaries such as asset managers, professional management firms like ours, who are mobilizing investor capital to opportunities that require a lot of shaping, a lot of structuring. So there is a little bit more risk and there is a little bit more complexity, but we think that hopefully is balanced by the return opportunity.
That was Franklin Amoo from Bayliss Emerging Markets and a member of President Biden's Advisory Council on Doing Business in Africa, speaking with us earlier from London. Now, coming up, the BRICS summit in late October kicked off with expansion of the group on the agenda. More on what that means for Africa next. This is Bloomberg. Russian President Vladimir Putin said the newly expanded BRICS group shows that a multipolar world is being created in a challenge to the U.S.-dominated global order. Russia hosted the first summit since the membership grew to 9 countries in January. Now, Bloomberg's Samuel Etienne reports on why the economic bloc increasingly matters to Africa as the continent seeks to expand its influence on the world stage.
The BRICS bloc has gone from this to this. Now, together, these countries make up 35% of the global economy and almost half of the world's population. Among the new members is Ethiopia, key to BRICS expansion in East Africa. Its biggest trading partner is China, while its relations with the US have recently been strained. From Washington's perspective, Ethiopia's inclusion, along with 10 official applicants and 35 other countries expressing interest, is likely a growing concern. Any country that joins BRICS may ultimately have to decide whose side it's on, a question that could be swayed by the next resident of the White House. While such a large bloc could ramp up economic cooperation, it could also lead to less cohesion and potentially more conflicting interests. And while Russia and China might today appear to have the upper hand in shaping the future of the group, the US and its allies will surely look to counter the growing clout of what some view as an anti-Western grouping.
Samuel Etienne there. Let's dive deeper into the story with Bloomberg's Kenya Bureau Chief Helen Nyambura, who's joining us from Nairobi. So, Helen, we had Etienne there walking us through some of the complicating factors with BRICS. With Ethiopia now in the BRICS, what are they hoping to achieve?
Well, it's the second sub-Saharan African nation to join the group after South Africa was admitted about 14 years ago, and BRICS is almost 2 decades old. The entry certainly is a recognition of Ethiopia's muscle in the region. It is East Africa's biggest economy and the continent's most populous country after Nigeria. Certainly more people than even Egypt, which also joined BRICS. As you know, BRIC member nations have very little in common and have struggled to shape, to form or mold a cohesive identity. Some view it as an alternative to the current global order, gravitating towards Beijing, a counterbalance of sorts to Western power as embodied by the G7, the Group of Seven. The main appeal for Ethiopia to join BRICS could be the possibility of having an alternative financial architecture separate to the US dollar. The bloc has created 2 new multilateral institutions, the New Development Bank or BRICS Bank, and the Contingent Reserve Arrangement, a rival of sorts to the World Bank and the IMF. Another attraction is China. It's a large trading partner and presents a huge market, and being in the bloc guarantees some face time with China's political and business leaders during summits. That's certainly a draw for Ethiopia. So for this country, so for Ethiopia, which is reforming its economy to attract even more investment, this could be the main draws for it.
And Helen, I mean, our Bloomberg intelligence team has found that BRICS could be double the size of G7 economies in 2030. That is a big picture. When we look at the region, though, where Ethiopia is sitting, East Africa region, what could their involvement potentially mean for them?
Yeah, well, some may dismiss, the BRICS, the expanded BRICS, as an inconsequential entity. It is gaining momentum and it's drawing more members. 40 nations want to join. 2024 have already formally applied. And Ethiopia's entry certainly gives Africa a voice at that table, in addition to South Africa's. The expanded BRICS, as Etienne said, represents about 45% of the world's population, 30% of global crude output. And that orientation towards the global South is a signal for African nations that have always felt excluded from the current international order and are becoming more vocal about a move towards multilateralism. So Ethiopia's entry is a signal.
A signal that we could potentially see continuing to expand. Helen Nyambura, we have to leave it there, but appreciate your reporting. Bloomberg's Kenya Bureau Chief there in Nairobi for us. Now, just a few other teasers here. On this week's Next Africa podcast, we profile Gwanta Madani. We were just talking there about Kenya. He's made his billions largely in India, but has been increasingly pushing into East Africa. Is it much needed private investment, or are some right to be skeptical? The episode is now available wherever you usually get your podcasts. And that is all we have time for today. Join us again next month and every month if you can. From me, Jennifer Zapasaja in Johannesburg, it's goodbye. We'll see you next time.